Hello everyone. Today I'm going to be sharing with you about why the housing price is keep on going up. There's a lot of talks that it might be a crash coming and right now is not a good time to buy, or people just assume why the price going up is a bubble that the crash is coming soon. I have a different opinion about this, so I wanted to share with you. By the time this video ends, you should understand what's happening right now, why the price is increasing, and what will happen the next coming months or even a year. So let's get to it. In case if you're new to my channel, make sure you subscribe. My name is Simon. I am an entrepreneur and also a real estate investor. I usually share content about entrepreneurship, investment, wellness, and happiness. Thank you for coming. Let's get to it. Lately, you've been hearing that a crash is coming, a bubble is going to bust, and things is going to be worse than the Great Depression, like the 1920s, and even it will be real estate market. It might be worse than 2008. There is a mixed review on that. I don't think it will ever gonna happen like what happened in 2008, because in 2008 there was a big predatory lending, which was there was a lot of wrong way, was a lot of people been getting mortgages and loans to purchase multiple properties. It was very easy to get a loan to purchase a property. Those days kinda are gone. I don't think they'll ever gonna come back. But right now what we are seeing is that the next coming years, if the economy really collapse and a lot of people keep on losing jobs and the economy is not rebounding, yes, of course we will have some foreclosures and property values it might go down. But again, at the same time, I wanted to share with you some statistics and some history from going back all the way to 1990, so I can share with you why right now the value of the prices keep on going up. Because when people purchase homes, usually they don't really purchase homes based on how much they want to spend on the house. It goes with the lenders, and the lenders figure out how much that person can afford to pay. So when you receive a mortgage approval loan, usually the bank will decide, okay, this person will be safely can afford this much money per month. That much money per month based on the interest rate, it will figure out how much of the house you can afford. So basically the bank is calculating how much money per month you can spend, not really how much of the value of the house you'll be qualified for, as based on how much money you can spend per month safely and easily that you can pay your mortgage. So with that, let's get to it. Some of the stuff it is making the market to go up. I'm going to share with you a little bit of a chart here so you can see what's going on. Let's get to it. All right, why housing market price keep increasing? And this is solely Simon's experience from 20 plus years of experience. That's what I'm sharing with you, just for the educational purpose, and this is my opinion based on some research I did, and also based on some of the experience I had in the past being in the real estate for a long time now. Since 2003 I've been investing on real estate. So these are the 5 factors I wanted to share with you. One is low inventory. Very low inventory right now. There is not that many houses being for sale. It can be because a lot of buyers have been snatching those homes as soon as they come up, and also a lot of people are just contracting and trying to figure out what is coming next, so they're not really thinking about moving to a different house, or changing areas, or even moving out of state. A lot of people are input to try and weather this pandemic where we are dealing with. So a lot of inventories not available right now on the market. When there is not a lot of inventory, it creates a supply and demand. Whenever there is less inventory, there is a high demand, which means more buyers than sellers. When that happens, prices increase because people will be willing to pay more to get that property, or in any situation, in any product. If there is more buyers than sellers, always price keep going up. Number two, the low interest rate. Right now, as we speak, right now at this time, interest rates been moving around at 3%, a little bit less, a little bit more, but it's been about 3% for a couple months now. A few months is pretty much from the beginning of the year have been decreasing a little bit. But that interest rate is a 50 years low. It never been this low at below 3% for the past 50 years. And I'm going to show you what that means when we talk about numbers. Number three is increase in construction cost. So if you're thinking about building a new home right now, or even buying an old home and you wanted to completely remodel, the construction cost has increased, which means every time that house has been remodeled and ready to come to for sale, or a new builder is looking at to build a new home, the price is increasing. So those are the big factors. And of course, like I talked to you a few minutes ago about the supply and demand, there is a huge demand. A lot of people can afford to buy homes because of low interest rate. People are willing to buy those homes instead of paying an increased rent, because in most cities rent has been increasing instead of decreasing, because there is more demand for rental. Because of that, price has been increasing. So a lot of people figuring out, instead of paying close to $1,000, why not spend the time and the money and invest it on a property and pay the mortgage. That's the mentality. And also because of how the money been printed, a lot of people are worried about the inflation being increasing, and so the value of the dollar decreasing. That way, if you put it on real estate, usually it's the safest place to put your money. So because of that, there's a lot of people are interested on buying properties. So the third thing I wanted to show you about is what was the house pricings going back, what's the median price and what's the average price for the past 20 plus years, 30 years. So since January 1990, if you look at the chart here, the median home, and this is the average pricing in the whole United States, from the slower cities to the big city. They put all the numbers together and averaged it out. So this numbers are in 2000 in January 1999, the median home was 125,000 and the average price was 151. The difference between the median and the average price is the median usually will compare how many homes are below and how many homes are above 125, and they'll figure out, then they'll take the number 125 because the 125 was in between. The average price is they will add up all the houses was sold in that January month, and they will divide and they'll get the average pricing. That's how they get the total amount. If we keep on looking at January 1995, the price increased, the median price increased by almost $2,900 to $127,900, and the average was $147. So if you look at the chart going down till about 2005, the number was increasing yearly. Then because of the 2008 crash in 2009 2010, a price dropped a little bit, which was 2018 was the median price, and the average price was almost the same from 2005 to 2010, which was 283,400,000. So now in January 2015, the price keep on increasing to 292 was the median and 356 was the average. And of course, January 2020, it increased even from January 2020. And right now, there is an increase of price difference because, like I said in the past, supply and demand been pushing the price to go even higher. So another chart I wanted to share with you is what was an average interest rate when we compare from 1990, because of the price, how low it was, people were buying, and also right now, if I'm going to show you what the interest rate is going to factor how much of the value of that home. Because right now, look at it, in 1990 interest rate was at 10%. In 1995 and the interest rate dropped to 9%, and in 2000 to 8%, 2005 was at 6%, 2010 was at 5%, and 15 was 4.5, and 2020 is 3.5 in January, but now we're sitting around 3% or lower. So this is a huge discount. The reason I'm saying that to you is because I'm going to show you the next chart. If you would have bought a house worth $150,000 in 1990 with the 10% interest, your payment would have been at $1,398, almost $1,400 a month. Right now, for the same amount of dollar, $150,000 with the 3% interest rate, right now your payment is almost 50% down to $735. So imagine how much a difference that is. That is why people are flocking and going to take advantage of this low interest rate, never been happened for the last 50 years, to acquire these properties, because it is a great deal. That's why. So, and also the last thing I want to share with you before I complete this video is that if you would have a $1,000 payment cap, that's how much your bank wanted to approve you. So if we were to calculate the $1,000 payment with 3% down and also without insurance and taxes included, this is just your mortgage payment with PMI, which is the property mortgage insurance the bank charge you. With that, if you have a $1,000 payment with the 10% of interest in 1990, you would have been able to buy a house was worth $107,000. Only $107,000 worth of a property. Right now, because of the 3% interest rate, 2020, right now, you could afford to buy $204,000 with the $1,000 payment. So if you figure these numbers, and if the interest rates stay as low as 3% or 4% or around this range, most likely the property value will not go down. Property value keep on increasing, because this is an amazing deal right now for home buyers. So that is my opinion about why the price is increasing on the real estate, why it's not coming down. And with all the news, and also some analysts keep on talking about the foreclosure are going to happen, a lot of people losing jobs, a lot of homes is going to be foreclosed, and all that property value is going to collapse and market is going to crash. All that noises you've been hearing, would that happen? I don't know. I can't tell you yes or no with that. But with what is going on right now, how low the interest rate it is, and how many houses are on market, and how many people are looking to buy a home, those supply and demand, as long as it stays high like that, and the interest low stays, the value of the homes will keep on increasing instead of decreasing. So this is my opinion. This is Simon again, as always. Thank you for watching, and we will catch you on the next video. If you didn't subscribe yet, make sure you do so now. As always, thank you again. Take care. We'll catch you on the next video. Bye bye.